As you may hear, it's the third day of the conference. I spent the last 2 days at the Crypto Assets Conference. I'm still here, but my voice is not. So I not usually speak the way I speak. And I would like to make a small role game, right, which kind of relies on my voice. So I would like to invite my team on stage. And I will do the worst thing a tech founder can ever do on stage. And this is a live demo, right? And for this live demo, I would like to have Maria, can you come here? A consumer who wants to buy coffee, a merchant who works at a coffee shop, and the CFO who will be overseeing the accounts. Yeah, so what are we going to do, right? The consumer, and this is one of the products. I'll explain everything later, but let's first do the demo. So she has a card. Right, something that looks like a traditional credit card, comes with a PIN code that everyone knows how to use one, right? Maria has a POS device. She works for a coffee shop, right? And yeah, wants to sell a coffee. So yeah, feel free to sell a coffee. And Tom, by the way, so he's a CPA. He worked as an auditor and then spent 15 years in banking. He was the global CFO of Treasury at UBS, right? So he is kind of in his CFO role, overseeing the accounts. All right, yeah, feel free to proceed. So the payment flow is fairly straightforward, right? It's literally tap and pay. It requires a PIN code because the amount is above the threshold. So you can set a threshold or in smaller amounts if needed. And what is unique about that everything is actually on-chain. And we have a flow of a consumer through the POS device to a financial institution. So, and why I say financial institution? Because we actually have three parties involved. We have the consumer with a non-custodial hardware wallet, right, which is literally digital cash. We have the merchant with the POS device. And Tom now looks at his account at a regulated crypto custodian. I'm the one who's running the crypto custodian. So now he received the transaction, but it's not yet credited to his bank account or to his wallet, to be precise. Now I have to go to my AML dashboard because every transaction, it can be automated or not, but every transaction goes through an AML check, which is fairly important for a regulated setup, right? So now I have to update my, and we cannot show everything here on stage, but feel free to come to our booth too, so we can guide you through. So now I prove the transaction in my AML dashboard, and it will be credited to Tom's account. And if we look on the blockchain, this is fairly interesting as well, and we even have someone who is sitting as an auditor, Jan from partner at EY. So I sent him the blockchain address, and Jan just tell us if you see any transactions on chain, like in the last minute. Well, he works for an audited company. Yeah, all right. So this is what happened. Consumer paid with a digital asset. It's not a digital euro yet because it's not yet existent. It was a euro stablecoin based on Cello, and I think we also have someone from Cello in the room as well. So we'll sell a euro stablecoin from his non-custodial wallet through the POS device to the wallet of the financial institution, right? And then we have the auditing company, let's say, and a block company representing. Those are the parties that are involved in the transaction. And this is how smooth, simple, and easy it was. Right? So again, why we rely on the card? Let's make another one. Because people say, yeah, why do you want the cards? Everyone wants to pay with a smartphone. Okay, I can do that. Maria, let's. Unfortunately, it only works, the NFC payment only works on Android yet because Apple is very restrictive. So maybe we can change that together. Yeah, and that's more or less it. So again, this one is rejected because the connection is a bit bad. So you can see what happened. The card, hardware wallet with NFC compatible with POS. And what is unique about the card is that This card uses a standard Jacob 4 chip. So it's fully compatible with Visa and MasterCard on all EMV networks. So it's fully certified EMV standards. Of course, we don't use a standard EMV network, we pay on-chain. But it's fully compatible with traditional banking infrastructure. You have the wallet, right? So we can also allow users to create a virtual card. And looking forward, it can be either custodial or non-custodial. This is all non-custodial setup. And again, people may doubt, why do you want non-custodial wallets? Crypto is bad, blockchain is bad, et cetera, et cetera. But I think it's important to give people the opportunity to have digital cash. Because there will be people who will want a sort of alternative of keeping their money with a bank or with a regulated institution. I think it is a fundamental right also to have a self-custody. And I think there will be a group of people who will like that. I think it's important because, of course, we all have our bank accounts, but we also understand, specifically recently, that there is significant counterparty risk involved in that. The POS device and the custody account. Well, I mean, ML dashboard, that's all what we like. I'm also certified in ML, I'm a lawyer by background, so. And this is the difference, right? So this is the traditional payment flow, which involves a lot of intermediaries. And we may have colleagues from Visa and MasterCard, we may have colleagues from acquirers here, or let's say the RTGS payment flow as well. And this is the Web3 payment flow. So it's also about simplifying a lot. And I think you may challenge that, and I think I do agree that we have to be fast, but I also do think that we, from the first time since 1150, and that's when the kind of European banking evolved with the Templar Knights, we have the chance to actually to build a different financial system that is built on different principles than rather than trusting someone with your money. All right, you can ask why this better, right? And there are plenty of benefits, both for consumers and the merchants. I think the cost is a significant factor for a lot of merchants, specifically. Paying high acquiring fees really hurts them, specifically because they pay on revenue, right? But it's not only that. What Web3 can actually offer here is the whole gamification part. A lot of people in the room spoke about how hard it is to actually convince consumers to use CBDCs. But here exactly something where Web3 can offer, right, in terms of gamification. So something that we built, like very simple play-turn games for the merchants to actually attract consumers, to lower the customer acquisition costs, to increase retention, to decrease the churn rate. What are further use cases? So of course, sports and entertainment. And the question is, if the payment is, I mean, the payment is painful enough, right? You have to give away money, right? That hurts. But at least we can get something rewarding in return. And not only borrowing cash back, but we can actually make an experience out of every payment. So imagine you would, whatever football club fan you are, you would have your club card, you could pay with your club token at the bar with your friends, and you'll receive, football players and NFTs rewards. When I grew up, I collected this like football player cards on paper, right? The kids of today are not going to do this on paper. They're going to collect it digitally. So this is all about how you can engage with these consumers, how you can engage with the audience, and bring the brand building for the companies as well. The same for the governments. So think about countrywide loyalty program, a tourism use case. You can be in the US, like Tom, for example. I can send him some, or donate, or wherever, airdrop him some Frankfurter coins, which he can spend only in Frankfurt at specific shops, and he will be inclined or motivated to come here to actually check it out. And the best thing, until he actually travels to Frankfurt and goes shopping, no cost occurs. This is something that is not possible in traditional financial system at the moment. You can do this on paper, but it's just much more costly in distribution, et cetera, et cetera. And that's why we thought we should give all of you the experience to try it out. I mean, you can pick up your DIA card at the registration. Once you get that, you get 10 DIA coins, which is more or less a voucher and the loyalty system for the conference. Airdrop to your card. You can spend it and get a Red Bull at our booth. And again, this is just the beginning. This is more or less a soft launch where we could try things out. I think there will be much more use cases to come for the next conferences. All right, I think, yeah, the rest is more or less self-explaining. You can also scan the QR codes and download it. That's it. If you have any questions, I think, Marcel, the floor is yours.